What's up guys, and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses on the WallStreetBets forum from the past week, so we can learn from other people's experiences. These videos are made possible by our channel members, who get access to these non-time sensitive videos one day in advance. First off, we have user GrouchyBlood2682, who has finally unlocked God mode with his next level loss porn. He has been back holding shares of Hyliion Holdings since December of 2020 and continued to add more to his position as the stock declined. In all, he has lost more than $157,000 on this single position. Hyliion produces electric drivetrains for trucks that are powered by a mini natural gas generator inside the truck. These drivetrains can be retrofitted onto existing trucks. The advantage over normal battery electric truck design is that its range is much longer and can be refueled as quickly as a diesel truck. The natural gas generator is also much more environmentally friendly than diesel, as it emits less greenhouse gases per mile driven. Hyliion also plans to manufacture their own truck called the ERX, which they plan to deploy for customer demonstration later this year. While their technology may appear promising to many, they are still an early stage company and do not expect to start shipments to fleet customers until 2022. Because of this, they reported a grand total of $0 of revenue for the years of 2020 and 2019. Hyliion went public through a SPAC in the summer of 2020 and almost immediately skyrocketed as part of the EV craze. In September, it peaked at $55 a share, which made it more than a five-bagger from its SPAC price of $10. However, in the winter of 2020, the stock started to tank and has declined more than 80% from its peak. The current stock price of $11 is only slightly above the original SPAC price. The decline in Hyliion's stock price mirrors other pre-revenue EV plays like QuantumScape, whose stock price faced similar declines during the same period. Many market observers noted that the SPAC market looked like a bubble after the historic gains in 2020. Hyliion is one of the most acute examples of how painful it can be to invest in a bubble as it bursts. This resulted in a $157,000 loss for the OP. Some commenters try to look on the bright side. This loss can hopefully serve as a valuable lesson to the OP not to invest in bubble stocks. However, this lesson came at the price of $157,000. We wish you luck on your future trades. Next off, we have user 4C Capo, who is bag holding significant losses on some failed stock and options plays. He is down almost $4,000 on Rocket Company's 27 strike calls expiring on April 16th. He owns a significant stock position in Sundial, which currently sits at a $30,000 loss. Finally, he has multiple call option positions and a stock position in United Wholesale Mortgage, all of which are down significantly. Adding up all of his positions, his portfolio is now a grand total of down $44,000. While Rocket Companies benefited from a short squeeze in early March, it has failed to hold on to those gains and has fallen more than 46%. It is now below the OP strike price of $27. Sundial Growers, a Canadian legal herb company, has similarly fallen precipitously over the past month. And finally, United Wholesale Mortgage has fallen to $7.86, more than 20% below its initial SPAC price of $10. United Wholesale Mortgage partners with independent mortgage brokers and helps them serve their mortgage customers. It is a very old and boring business. It's the type of company that you'd expect boomers to hold in their retirement portfolios. But inexplicably, it has actually become very popular among WallStreetBets users who usually prefer high-flying EV stocks. It appears that there may be quite a few value investors on WallStreetBets. Next off, we have user Short Dogemaster, who is down big after making a big loss on his Disney YOLO. He reasons that with vaccines being rolled out rapidly in the country, Disneyland will benefit from a massive pent-up demand as boomers are finally able to take their grandkids to the park. He bought 1,555 contracts of 280 strike calls expiring on July 16th. Disney stock has fallen 7% in the past month. The calls provide leveraged exposure to the underlying stock, so this 7% decline in share price has resulted in a 47% or $57,000 loss on his call position. His calls still don't expire for another 3 months, so it's still possible that his investment could turn out to be a winner. Although his strike price of $280 is very optimistic as it currently is significantly out of the money. Disney's share price will have to increase by more than 29% for his call to expire in the money. Even with optimism about the reopening, this seems like a long shot. Furthermore, much of the optimism about the reopening is already factored into Disney's share price. The current price of $188 is already significantly above the pre-COVID highs of $150. Hopefully these calls end up working out for this WallStreetBets user, but at this point it seems like a slim chance. Next up, we have user Lohith with a massive 10 times return on a SPY YOLO. He was all in on 404 contracts of SPY calls of various strikes. They all expired on April 5th, and some of them were profitable while some weren't. On April 5th, the SPY jumped to about $406 a share, which put his 404 strike calls in the money, but his 407 and 410 calls out of the money. Luckily, he only had 19 contracts of the higher strike calls, but had 385 contracts of the 404 strike calls, which expired in the money. All told, he spent about $7,000 on these calls, and cashed out with $87,000. That's enough for a 1,000% return, putting him in 10-bagger territory. This Robinhood user's success shouldn't be seen as any indication that making such massive gains is easy, or that anyone can replicate it without taking on a lot of risk. Several of the commenters have been trading SPY options for a long time, and say how risky this trader's positions were. Putting up enough money to buy 4,000 contracts of SPY calls means that either the calls are very cheap and thus have very high probability of expiring worthless, or that you are putting up a huge amount of money in the trade. In this case, both apply to some extent. The SPY has had a very good past few days, but it could easily have gone down in the same period of time. The OP was very close to having a negative 100% return on the trade in just the span of a few days. However, he took the plunge and came out on top. Congratulations on your 10-bagger gains. Next we have user Yimmy with a $21,600 gain on calls on Hymax, ticker symbol HIMX. Hymax is a Taiwanese small-cap semiconductor company that produces a product called fabless semiconductors. Its products are mainly used in display systems such as TVs, cell phones, and in-vehicle displays. In the past several months, there's been a massive chip shortage causing the price of all semiconductor products to rise massively. Hymax has been a huge beneficiary of the semiconductor shortage, and its stock price has more than tripled in value in the last 6 months alone. This Robinhood trader has played the semiconductor shortage perfectly, longing calls on Hymax to the brim. He bought 150 call contracts at an $18 strike price expiring in September, 66 contracts at the same strike but expiring in June, and 75 19 strike call contracts expiring this May. After Hymax's recent moves to the upside, all the calls are still significantly out of the money, but on the way towards the break-even price. Due to the time value of the options increasing, the calls have increased in value by $21,600, or 72%. Many commenters admire the OP's foresight to have bought Hymax when he did. User Smarty300 asks how he found the stock, and also if he thinks it's not too late to make an investment. The OP says that he believes it's not too late to buy Hymax even after the recent run-up. Other commenters offer information as to why Hymax is a solid company with a great and innovative product. User Ondori says that he expects Hymax to beat earnings in the next few weeks based on their previous guidance. He has been playing calls on the stock for the past several months and says that he is up massively. However, do your own research before making a decision to follow suit. Next we have user ElJunbo809 who made massive tendies on General Motors options. He is very bullish on GM stock, apparently thinking that it will go to $100 a share. Based on the current trajectory of the stock, which is up 187% in the past year alone, it definitely looks like it could. The OP was long 25 call option contracts on GM with a $40 strike price and expiring in January of next year. He bought them for 60 cents each, presumably when they are still far out of the money. With GM stock at $61.27 a share today, they are now well in the money by a $21 margin of safety. As a result, the calls are now worth $23.50 apiece for a 3,800% gain. This has made his $1,500 investment spike to almost $60,000. Some commenters wonder when the OP entered the trade. One user guesses March of last year at the pandemic lows. He also points out that if you had bought long-dated calls on pretty much any stock in the stock market in March of last year, you would have made huge gains. Which is true because the broad market has experienced one of the biggest straight lines up since the pandemic lows. The S&P 500 index is up about 77% since then. Another commenter says that the OP forgot the E. He's referring to the ticker symbol of GM, joking that the ticker was supposed to be for GameStop. Congratulations on your 40-bagger. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also, make sure to check out our second channel, WSM Research, where we post DD on high-growth stocks. As always, thank you so much for watching. Wall Street Millennial, signing out.